Happy Friday, traders. It's 8:03 a.m. Chicago time on the 28th of February, 2020. This is episode number 1702. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance not necessarily indicative of future results. This morning, the market is selling off even further. The S&Ps have tested through the 2,900 figure and we're basically into as far back as 2018's range. But overall, the DAX took just a punch to the throat here. The DAX down 520 points, 4.25% down. It's big. Euro Stoxx 50 down 135 points, or about 4%. Crude is off again, trading at $45.50, down 3.3%. The Nasdaq 139 points, down 1.66, and the S&P is down 45 points, 46 points, or 1.6%. That's how it stands. Risk completely off. Allocation is to safety here. We are seeing gold come off a little bit. What's amazing is despite the money that's come out of equities, which is approximately, I didn't calculate it this morning, but we're down about 14% from the highs so far. As a point of reference, just a little bit of homework. The last time we had a big rotation down, and this isn't the market, collapsing just yet, although we've had some pretty big volume and pretty big range days in the futures. Just as a point of reference, if you recall, in from January 26th to 2018, we made a high, and then the first week, the following week, basically, in February of 2018, the market turned down and it dropped 12%. 12%. Sorry, let me see if I can silence this. Dropped 12%. We're at 14%. I'm not saying that we're overdue for a correction or anything, because you know what? That is way above my pay grade. I'm going to stick with the time frame that I know, which is the day time frame, and that's why I've not been doing any scenarios, because the day time frame is not um, in control, is not relevant currently. This thing is cutting through all kinds of areas that we would consider to be technical. This is more a bigger time frame macro type drop. Okay, at some point it is likely to find its buyers. At some point, the money that's sitting on the sidelines, that has been sitting on the sidelines, that may have liquidated higher, we'll start to see value and push in. But at this point, not seeing any reason that I'm going to sit here and talk up a pop higher. I did earlier this week, as I on the initial gap, because there were clear indications, technical indications, that something is up with the way it's selling. So that's where we stand this morning. The yen is stronger, but the bonds are up almost two handles in the futures. That's a fair amount for the bonds, and the 10 years are up a handle and a tick. The euro bond up almost one full handle. We don't see that very often. In terms of what's ahead for today, everybody's got a calendar. Look at it. We did get some numbers this morning: France GDP, Canada GDP, and the U.S. personal income and personal spending. We do still have. We also got wholesale inventories. We do still have the Chicago PMI number, which comes out at 42 past the hour for subscribers, approximately 42 past the hour, and 45 minutes past the hour for the public. We get Michigan Sentiment Final at the top of the hour at 10 o'clock Eastern. And that'll be it. The NBS manufacturing PMI is expected out of China China, at 8 p.m. Eastern this evening. One thing to keep in mind, we are, this is option expiration, weekly option expiration this week. The other thing to keep in mind is that the treasuries should be looking at June at this point, and if you have not done so, you should reload your data for the treasuries, treasury futures, depending on your platform. Make sure your data is actually equalized. Okay, so treasuries trading June, U.S. Treasuries trading June currently. Um, and then what's left? There was something else. Oh, the other thing to keep in mind is it's Friday. It's Friday, and the news keeps pouring in on this coronavirus. And so the market after today has little opportunity to protect itself, so to speak, to protect itself for anything that comes out until Sunday. Sunday night at 6 p.m. Eastern, when the futures open again, I'm expecting some action as we start the week next week. So I'll be here. I'll be paying attention. Convergent members will want to make sure that to look for notes in the Head Trader channel. And just it's and it's we're wrapping up February. March 1st is on Sunday, so this is the last Friday of February, and there's a whole lot of window dressing to be done coming into the end of this month. So what does that mean to us traders? It means it's been goofy and it's likely to continue to get goofy into the close today. So don't fade any movement into the closing range today. It's probably best to stop trading about 20 minutes or a half hour before the cash close today. Word to the wise, okay? Normally today, the last Friday of the month, I have this thing where I ask people who are watching the feed here on the YouTube chat or on Periscope to please type in your location. Just tell us where you're from, city, state, country, or city, province, country, so we can see the wide variety of people tuning in. Hopefully, you can find someone near you. And I'll do my best to connect you as I've done. But the market's a little busy for this. If you feel like doing it, fine. If not, that's fine as well. But my goal is to connect traders with each other. We all do better when we're connected, right? That's what convergence about. So let's move on to um, what we talked about yesterday. Yesterday, the big thing, I'm not doing any scenarios currently. Yesterday, the big thing was it was likely to target this range between 3070 and 3040, 3070 and 3040. That's what we were looking for yesterday, as you see on your screen there. I did tell you that the movement from Wednesday had Delta going for it. I want to show you a little bit of something by contrast here. This is yesterday's action. Pretty big drop. Don't let the scale fool you here. There's 120 points of range or something like that yesterday. So it went from 3100-ish. Let me see, 3100-ish or 3090 something-ish. All the way down to 2952. There's a lot of range there. But look at the overall delta here. This is the delta. These are the delta bars, okay? And the delta it really took a hit on the close. You could see sellers just stepped in here once we started to really dip off. And that was the last hour. This is a higher time frame seller coming in, and the delta rolled way down, and a lot of it is pretty big size. This is a very large lot, 100 lots or better, hitting the bid on the way down. But the delta really didn't get bashed all that much, given that close to close yesterday, we were 153 and a half points apart from the prior day to yesterday's close, 153 points down. But with a delta of 3,000, come on, there's something really odd going on here, and it just seems like either. The reasoning could for this, not that it all matters all that much, could be that the futures are being used for what they were created, and that is to hedge other areas, other positions, or there's accumulation on the way down as prices drop. There are some buyers coming in and buying this up, and the large lot, which is 10 to 99, uh, 10 to 99 lot contract sizes, have kind of been holding up pretty decent. Not the day before yesterday, but the day before that. They are basically, you could see that the delta, the overall delta is tracking the large lot, and the very large lots have been sellers now for a couple of days. And so it's kind of interesting. It's hard for me to read too much into it, but it appears to be giving me a clue that that there's a little bit of accumulation going on here. These are the profiles and how they look. I mean, it's so intense. It's so hard to make any sense of what it's trying to do, especially on these pops. But overall, we have very elongated profiles and lots of singles and things like that. So the profiles recently have been telling the story that we're already seeing, which is, hey, this is a high time frame territory. I want to pull up the composite here and have you look at where we are in the overall picture. So I moved back a swing. I was using the June 30th swing of last year, and we've breached the 50 and the 62% of that. So I moved back a swing. The prior swing is that sell-off low from December 2018 to the top. RTH only shows us the midpoints right here at 28.74 and a quarter. At 28.74 and a quarter, and we're in this relatively big balance area here. I'm paying very particular attention to the composite, to the composite that is kind of encircling this area. So the MC point of control, the MC here is 2019 June 3rd all the way to October 31st, actually. This is the composite I'm looking at that is in control, and there are some pretty distinct areas. High volume node that we were tangled up in here at 2930, and we're we've broken below that by 50 points. And it's eating right through all these ranges. The last significant low in this area is about 28.30. 28.30. We're currently trading 28.86. I also posted on Twitter the price limits just in case this thing loses gets into a slippery slope here more than it has. You have the price limits on my Twitter feed. You can find that at twitter.com/futurestrader71. The order flow picture, entirely different here. It's just been banging away on these bids. The order flow has been, yesterday, in my opinion, the order flow was relatively clean. And in this kind of environment where the higher time frame is in play, I'm not a person that can trade or immediately switch to being a swing trader or something. But the price action has been pretty pure in my opinion. It is wide. The rotations are very, very wide. I went over the rotation structure yesterday for the Convergent members to talk about what the statistics are, and I'll go over those real quick on a 1-minute bar basis, looking at the last 5 sessions using 9-bar tops. The normal rotation on a 1-minute a bar chart, the normal rotation can be as high as 13 points up or 15 points down. This means that if you're using a 1-minute bar, which is a pretty small time frame, it means that if your stop is inside of that 13-point range, it's in the noise. Normally, we would want to use something like 2 ticks ahead of that range. Let's call the up and down average at 14 points. Normally, the way we use rotations, which is this pane here, so I'm monitoring rotations down here. Normally, when we use this, it guides it statistically. We're using statistics to guide the way we place our stops and decide what our risk structure is, or what our risk exposure is. If rotation, 1 minute rotation, the 1 minute rotation meaning 1 minute bars, rotation from this high to this low or whatever. If that's on average, if that's, the normal rotation is expanded to 14 points, what that says normally is we want our stop to be outside of 14 points, and we want our key target to be inside of that 14 points by a couple of ticks. And that tells us what we should be shooting for, and it adjusts for volatility. 14 points, folks. That's a lot. The most common, or the point of control of the rotations, is 19 points up and 6 points down. That's quite a bit. What does that mean to you and me? It means put on your diapers if you're going to trade. I mean, this is an environment where you really want to trade as small as possible. You want to trade a bigger account. If you're going to trade, there's a high probability of loss in this kind of environment because it does trigger emotion. The movement is very quick. It is better to watch this and to engage later in the session where the volatility slows down. It's better to wait out the first 2 hours of trading. Okay, once Europe closes at 11:30 Eastern, things tend to take a slower kind of a smaller step. And if you're a day trader, it'd be wise to engage at that point. It's really a roll of the dice, or really flip of a coin in our business, to engage with this market on the open at this point. It just makes no sense because it's just a guess and you're relying on luck, and luck has a very funny edge. It has an unpredictable edge, unfortunately. So if you're making money and killing it, you're getting short and you're making just bazillions or whatever. Hopefully you have a plan for when the market turns, because oftentimes I've seen traders, and I've seen this way too many times, they get into the flow of the trade, they press, they make money, they're happy, they think they have got it licked, boom, they figured it out, and then the market turns and they don't have a plan because they've switched into something else, and there's no way to recognize when it's a drawdown period or there's an adjustment needed, and so they end up giving all of it back. Let's take a look at what we're expecting for today, because I am getting long-winded. If you can take a moment and just hit the like button for me on YouTube, I would really appreciate it. If you're on Periscope, just hit the little heart. Appreciate that. Bless your little heart. And let's get into what we're looking for today. So these stock zones seem like, oh my God, you've got just horizontal stock zone areas all over the place. Dude, what is this? It's because these stock zones were formed. These stock zone areas were formed when we were here last time, right? I'm tracking what the market has done in the past. And again, I'm going to tell you that I'm not going to sit here and draw scenarios, but we're in, I want to squish this down. I want to tell you what I want to point out here is that we're in this kind of area right now with a big, I think this is the this is the CVPOC, or at least this is a big MC POC at 2745 below, and we are in this region. We're opening in a gap. We're currently trading right here. We're opening in a gap. Yesterday could not close the gap. Yesterday could not close the gap and sold off. And we've got to go to a bigger time frame. The market this morning, when we come in to see what's going on, The key element here is to see what kind of a response we get. So this morning, we're pushing up against the lows. In fact, let me take a moment and just go back to review and look at the overnight session. Here's the overnight session. We sold off, we opened. There was just a very, very weak attempt at pushing higher, very weak attempt. And then it started to drop in the Asian session, pulls back to about mid. And there was an attempt in the European session to kind of take a bounce, and we've been selling off. Volume, again, is ridiculous. We're at 1.54 million. That is extremely high volume for the overnight session. There's a lot of participation here. The book is very thin still. And so again, another point that there is significant risk here. The book can be swept quite easily, and it looks kind of weak to me. So it looks like there's likely to be a continuation down. So back to what we're looking at for today. And today, the biggest thing I'm looking for is, does it become responsive? We are out of range and we are in this selling thing. The primary idea is we bounce and then we run off again. Okay, and this area down below, the 27.45 area, is attainable. We just got to keep an eye on those limits. 2770 is the lock limit for today. 2770 is the lock limit for today. So right here is lock limit. Okay, that's only 100 points from where we are currently, and that's just the biggest attraction down below in terms of volume. So the main expectation still remains an open that attempts to push higher and sells off. Again, it is Friday, so that's what we're looking for. It's really important to watch early on. Be glued to your computer at this point. Doesn't mean you should trade. Be glued to your computer. If it does push higher, look for that overnight point of control. And there are several key areas ahead of that. But really, I can't tell you more other than watch what it does. Is it being responsive? Are buyers able to lift? Currently, buyers are are showing a valiant effort here. Uh, so you could see here, buyers come in and they show a valiant effort at bouncing things up, and then immediately after you get this super thin but wide-ranging move down. If I were to read this chart right now, actually, it looks like the sellers are petering out. But overall, this has been an all-night phenomenon where we would just drop, make new lows, and we would push up, and then they would take them right back. There's just the market's not able to hang on to any of these rotations up. Look at this. Look at this pane here. These are the deltas uh, per PNF bar. This is a PNF chart, a tick by 8, and you could see that the outstanding delta is to the short side. We don't see that expansion up, telling us that the buyers are just not getting much for their effort. Okay, I'll leave you with that vagueness. Sorry, the market's open in 3 minutes. I've kind of talked for long. Good luck. I'll catch you on Monday. Okay, thanks.